David Brunella here, Guaranteed Rate. Just want to go over something that I get a lot of questions about, and that is in regards to mortgage insurance. So the odds are if you purchased a home and you didn't put down 20%, you are paying mortgage insurance. Mortgage insurance is there when you don't put down the 20%, and it covers the lender, the investor, or whether that's Fannie Mae, Freddie Mac, Ginnie Mae, it covers them on that percent that's over that 80%. So for example, if you bought a home for $200,000 and you didn't put down $40,000, you would have mortgage insurance. Now it's a little bit more to it. On FHA loans, for example, if you bought with an FHA loan after 2013, you will have mortgage insurance for the duration of that loan. That doesn't mean you're married to that mortgage insurance. You are always able to refinance out of that FHA loan and move yourself into a conventional loan. So that's very simple. All you need to do is take a look at your next mortgage statement, reach out to your real estate agent and ask them, hey, could you let me know what my home comps out at? They'd be definitely willing to help you out. And if you need any help with that, I can definitely put you through to an agent that can assist. If they tell you that that home has value that has enough equity, you could then reach out to your lender, ask them, hey, I want to do a refinance and get out of my mortgage insurance. So that's for you guys that are in an FHA loan. Now, if you're in a conventional loan, it could be a little bit easier of a process. We're lucky in the fact that we're here living in the greater Phoenix metropolitan area, and we've seen some good appreciation. So you could have bought a home 2 years ago and have 20% equity. And I see it pretty much regularly where that is the case. Now, this is where you need to know your rights and know how you're protected. There is a law, and it's called the Homeowners Protection Act. I'll put that in the link, a link to the CFPB, which is the Consumer Financial Protection Bureau, which is a federal agency that's there to protect you. Now, there are some rules to how you can get this removed. You do have to have the equity in your home, and you have to follow some steps. The first step is you have to make your request in writing to your servicer. You also have to have good pay history. The lender, once you make this request, has a couple of things that they can require of you. One of them, they can require that you certify you don't have a second lien, which means you didn't take out a home equity loan and you don't owe any other money on that property other than the loan to them. That's fairly easy to verify. That's not something you should worry too much about. I don't really see that being requested. But the thing that they will pretty much always require you to do is to pay for an appraisal. So what that appraisal is going to do is going to give them a value of what your home is today, and then what they'll do is they'll base it back to the original purchase price of the home, and if you have that equity, your mortgage insurance gets removed. Now, the thing to keep in mind is I have a lot of people that do call their servicer and they say, hey, I have reason to believe I have equity in my home now and I need to get my mortgage insurance removed, and they get common responses that say, you haven't hit the minimum required time, you haven't been in your home for 2 years, you haven't been in your home for 5 years, and they kind of just shut you out. Well, this is where you need to know your rights. Check the link that's in the bottom of this video on the post, and it'll direct you to the Consumer Financial Protection Bureau. It does very much reference the fact that Fannie Mae, Freddie Mac do have overlays, and they do sometimes put restrictions on when you can remove mortgage insurance. Those overlays do not supersede federal law. So when you get the pushback that says you haven't hit a minimum required time, reference back to the Homeowners Protection Act. This is federal law, guys. This isn't something that these servicers should be taking lightly, and they won't take lightly. A well-informed customer is a great tool. It's something that's going to be helping you to get this mortgage insurance removed. If you have any questions, let me know. I'd be happy to go over it with you. There's a lot of people out there that I'm watching this video that are probably paying mortgage insurance that could get it removed. So if you could save a little bit of money, put a little extra money in your pocket every month, it's basically like you're giving yourself a raise. You know, next time you get your mortgage statement, take a look at it, see how much you're paying, do some homework. If you have any questions, like I said, I'm here. I'll be willing to help you, and if you need any help getting values for your home, I'd be happy to put you with someone that can assist. Once again, David Brunella, Guaranteed Rate. Have a great day.